So any little news on Carvana, positive news, is going to pump the stock price because the stock is way heavily shorted. And that pump actually began at the beginning of 2023. Yeah, this move higher was when they announced to the markets that they were going to renegotiate their interest rates on their debt, making it more feasible for them to sustain the operations longer term, with the hope of surviving, obviously, or getting through the high interest rates environment. So yeah, this spike higher uh, was only due to shorts, and the stock continues to remain heavily shorted. So before we continue with the analysis, we're going to look at this article as they were recently praised by one analyst on Wall Street who thinks that the stock can go higher. So investment bank RBC Capital Markets just doubled its price target on Carvana shares to $90 per share and removed its sell rating on the stock, re-rating the stock to a sector perform. Now, until today, RBC had insisted that Carvana was uninvestable and predicted that stock would lose half its value, falling to $45 per share. That's not the case. Again, the problem with that thesis, though, is that too many people agree with it, and explained in a streetinsider.com write-up. So everyone was on the one side of the trade setup. Typically, when everyone's on one side, you want to go against the herd. And if you go against the herd, typically you're handsomely rewarded. So currently, 43% of Carvana's stock is sold short. That's an incredible number. Almost any positive news, for example, a return to more meaningful unit growth or improvements in per car profitability, might permit Carvana to begin paying down debt. Could shake the confidence in course traders to begin covering their short position. So if the stock is moving up, you have buyers buying the stock. And if the shorts have to recover, they have to, because they originally sold, they got to buy back their shares, right? So putting more fuel to the fire. And in that scenario, any rise in Carvana's share price could quickly snowball, lifting the shares higher, forcing more shorts to close their position and buying back shares, which would in turn lift the shares higher. So it's this infinite loop as this article is describing. Now, admittedly, buying into a stock with $7.4 billion in debt coming due over the next 7 years probably sounds pretty risky too. But with Carvana's reporting positive profits again and expected to generate as much as $4 billion in free cash flow over the next 5 years, the bet could pay off, right? Because the stock was once trading at, let's see, $300+ got as high as 376. And over the next 7 years, well, right now we're in a high interest rate environment, and that's not going to continue. As we already know that at least Fed Powell is pausing rates. If we go into recession, we're going to start seeing cuts. Even if we don't go into recession, we're going to see cuts because the Feds can't pay down their own debt due to the high interest rates environment. All right, so originally when price broke this daily sell-off up at $66, the next setup was a retest to what was a sell zone, which became flip zone and a buy zone. Let's scroll down to the daily chart so I can show you that zone. So you had a drop in price, basing candles, and the drop. This was nice too. Drop, a couple of basing candles, and then drop. And it worked out once and twice, almost a third time. And you can see when price came up and dipped his toes in the water on the lower portion of the zone. That was good for a 4-to-1 reward to risk ratio setup. And then when it came back down to the buyers, that's really what you want to do. You want to go with the trend. And had you bought at the daily buyers level at $38, you would be up at least 100%. So let's take off that zone and let's see if there's another level of interest. Now you did have this kind of setup taking place. All right, so yes, can price fill that gap? Most certainly, but it's on no volume, so can price come back and pull back even further? I still think that the best level to go long is closer to $60, but I do think that we get to 100 before that $60 level arrives. Not unless the markets pull back, and they're due for a pullback. But there's so much good news, and bad news is good news, that we could see prices move higher. I think the key to these markets right now is going to be NVIDIA. And whatever happens in the video, I think it's going to happen to the markets. So thanks for watching. Subscribe. Please like the video.